Well, hi and welcome to the show. This is basically in response to a question that came in this morning from Tony. Thank you very much, Tony. Absolutely great question. It was relative to a video that I'd previously made where we went over a training session, I believe, with Mark and Rick. And we were talking about 3 yellow bars going up on the chart, and we were using the 45-minute chart. And Tony's question that came in said that those 3 bars were not showing on the 15-minute. Okay, and he knows that. He wasn't pointing out to saying, oh, they're not there, that's an error. But it warrants an explanation as to how we're trading that. If we're looking at, are we trading on a 15-minute chart? Are we trading on a 45-minute chart? And how are those two correlating together? So I thought what I'd do this morning is to obviously come on and make this quick video, and I will also have a look at the charts, the 45-minute and the 15-minute, and then we'll have a sort of, we'll juggle around and see what we pull out of that. First off, before we get onto the charts, of course, there's always cycles within cycles. Now, if you go to the course, or actually in my book, I think as well, you will see where I talk about cycles within cycles. So just how big do they get and how small do they get? Well, they could get big in terms of months. You could have a month cycle of accumulation and manipulation and profit release over months. You could have them over the tiniest of time frames. Now, when I was trading, heavily trading, when I lived back in Spain, I was actually trading this before even the pack came along. I was trading on a tick chart. Now, for those of you who don't know what a tick chart is, it's literally a tick, tick, tick. It's a point. There is no bar. All there is a grey screen, or however you set it up, and it's a tick chart. So your individual prices are coming in, and they're making a dot on the screen. Now, this was when there was different types of data feed. It was a satellite feed, that sort of thing. It was a completely different environment. I don't think many people trade like that. They may do. I don't think they do, especially when. I think there'll be an issue with that, with like an internet feed now. I'm not sure, I don't know. But when I was doing it, it was from a live data feed directly from the exchange in, so it was very different. But within those little dots, I would be looking for the cycles. So they might happen over 2 or 3 minutes. It might happen over 2 or 3 hours, but I'd still be looking at exactly accumulation, manipulation, and profit release under there. So anyway, let's get over and have a look on the charts and see how we correlate the different time frames to the overall theme of what we're doing. So let's get over now, and we should see that's the 15 minutes. So I'm going to close that one down, and I'm going to call up the 15 minutes so we can start off from where we were. So when we were talking about on the training video, we were looking at these 3 bars going up through here, and we were talking about how there was this waning of belief. So in other words, the beliefs are running out of the market, or the volume is running out of the market, the commitment is weakening in the market, and yet the market is still rising. Now that in itself is an anomaly. Okay, so we talked about that being an anomaly. That's an anomaly that something's not quite right. It's like you're coming to a hill and a car, you put your foot on the gas and you accelerate up the hill. Imagine, you look down at the passenger or whatever, and your foot's coming off of the accelerator, but you're still going up the hill and gaining speed. So there's an anomaly. There's something not quite right. And that's exactly the same that what we're looking at here. And it is only that anomaly that draws us to say, okay, well, what's going on? Is there a possible trade out of here? And we can see clearly there was, and then we look back and we see the stop taking through that period. Let me just drop a line on through there, so we saw, we can say, okay, that was stop taking as well, and then we see the drop down bar through here and then back through here. So, and when we're looking at this and we're looking to enter the market, I'm showing you a 45-minute chart to actually give you stability in what you look at, so you can take a broader look, a more, I don't want to say slowed down, because it's all the same time in a way. When you're looking at this, we've segmented it off into times, but it's really real time, lifetime. It is what it is when you're looking at the market. We don't change the time of the data coming in. We're not changing anything, we're segmenting it, but that stream of data coming in is the same regardless of what time frame you're looking at. Okay, so back over now, let's have a look on the chart again. I'm going to pull up these, well, we'll go to the 15-minute first, just because it's a bit tight to put two charts on there. Now, but one other thing I'll just quickly show you, Impact, which is very useful. We've got this button up here, and it says position cursor at the same time on all related charts. I don't know if you can actually see, you don't see that tooltip pop up there, but there's a just above where I am now, there is a, let me see if I can just move that down a little bit. There we go. So there's this button just here, that one there, next to the HV on there, okay? Now if you click on that, something very clever happens. Well, I think it's very clever anyway, on there. If you look now, what you see is, if you move on the 45-minute chart, you can see that the cursor is matching up on the, in this case, the 15-minute time frame. So it allows you to very quickly say, okay, well, here, what was going on here on the 45, and you could instantly see that information over on the 15. It might be a different time frame, like I say, you can have a different time frame up there, but it instantly gives you that. Now, if you go on this one, notice it doesn't go back to that time frame, and that's because I just haven't activated it on the chart. If I go up here, I click on that, and then you see it goes back to the other chart. So you can oscillate it between the two. So I've got it activated on both charts now, and of course, as I move it on the 15-minute chart, I'm moving now, it's moving on the 45-minute chart. So let's just go back to the 45-minute, click on that one, so it takes the yellow box off. So we can see what's occurring through here. So, you know, I like to have these two time frames open because I like to enter the market on a 15-minute time frame. It's just, you know, that's my preference. That's what I like to do. It doesn't have to be yours. If you're a different type of trader, let's suppose in, you know, for example, you might be trading over a longer time frame. You might be at work, you know, so you might be looking at a 45 or an hour or a 4-hour chart. You know, the process is still the same. Okay, so if we are looking like this and we're looking at the complete process, what we're looking for is accumulation, manipulation, profit release, as I go on about, you know, repeatedly. So we're looking at this, or we're looking at this. If you were just looking at a 15-minute chart and you saw this action through here, and let's just suppose you will just pull that up there, so you'd seen this action coming through here, the stop take. In this case, the stop take would be quite clear to see. Okay, you'd see the stop take. Now what you do is you'd go back to say, okay, well, you know, what have we got supporting evidence? What is there anything, you know, why is this cut? I can see that the market's been pushed up. I can see that the market's dropped down. I can see that we've got some waning beliefs to the upside here as well. Okay, is there anything else? Okay, now you go back and you can go to call up your 45-minute chart or your longer time frame, and now you're really correlating the evidence. You're pulling these two charts together to say, okay, well, okay, now I can see what's going on here. You might then go back and pull up both charts, go back to the two, put on your synchronized cursor so you can match this up, and you can say, right, okay, now what's happened on the 15-minute, I can now see why that has occurred on there. Okay, now I want to look for a retrace, and now you can see you can use your trade finder tool here. So you would then bring it up onto this first stage here. You can see actually, incidentally, there we go. It goes exactly up to the 16 pips here, and then away it goes again. Again, that's quite early to get in. But if you were looking over at this chart, of course, we have the same distance of retrace, but here it gives us that nice shape, and I use the word shape there hesitantly because I don't want you to get caught up on shapes, of course, but it shows us a better retrace. It's in a way it's sort of slowed it down, hasn't it? But it's definitely given us that nice active retrace. And of course we weren't around that time, but you know, you're going to follow this down, and you can see what's going on through here. Now this is where you then can go back to the 45-minute chart and say, because now you can see the market has come down this far, okay, and say, well, okay, well, you know, it's gone a good way. I can see this going up for this retrace, but remember, you need to be choosing, or you need to be maintaining the understanding of, are you just focusing on which side of the market? In this case, short. You need to be having that in your mind, because you need to be looking at one side of the market. If you can't make your mind up as opposed to are you long or are you short, or which way is the market likely to go from here, you haven't really done your homework. You haven't really set yourself up to give you that underlying strength or weakness, and you need to go back and do that. How do you do that? Go back and look at your longer time frames. Look at how the market has reacted over time. So go back onto here, and so once you see this again, you might only wake up here. You see your stop take. Go back, look at your 45-minute chart, see what's going on. Again, could be a longer time frame. So all you're doing here as going through this is you are getting your underlying strength or weakness, and then you're using your charts to map around as to where your lowest risk entry is, accordance with your underlying strength or weakness. So there is no one chart, there is no 45-minute, there is no 15-minute as such. It is a constant stream of information coming through. We only use time frames to enable us to look at segments. That's all. We're trying to get a handle on the overall movement, on the overall stream of information coming through. We're trying to get a handle on that, and so we're using time frames in that respect to show us, okay, where is the market currently going to be going to, or what phase the market is currently in, and where can we get a low risk entry. And that's really the answer to that question. Sorry if it went on a little bit long, but I'm trying to put a lot of things together in there without saying, okay, go and look at this 15-minute chart, go and look at this 60-minute chart, go and look at the 15 or 45. That's not the way to do this business. It's a constant stream of data coming through. Use the different time frames to analyze the constant stream of data to give you the underlying strength or weakness. Move then to look in at where you can find your low risk entry, which is going to be around after your stop taking, and so when the market gets into a profit release. So I hope that one's helped a little bit. I'll put that up now in the training area, so you've got access to that. Thanks very much, Tony, for sending that question in. If you've got other questions, send them in. Every time you send a question in, that gives me an opportunity to make a video and remember things that I've long since forgotten and put those out, which I really enjoy. I really enjoy doing and looking at the charts like this and helping you guys. So send any questions in, and I'll catch up with you very soon. Take care.